Have you ever stared at a trading chart, convinced you saw the perfect setup, only to watch the market move in the complete opposite direction? You've spent countless hours, maybe even years, mastering every technical indicator known to man, from Bollinger Bands and MACD to Fibonacci retracements and candlestick patterns. You can spot a head and shoulders from a mile away and debate the merits of a golden cross versus a death cross with the best of them. Yet, despite all this knowledge, the wins feel random and the losses sting just a little too much. If success in trading is all about brilliant analysis, why do so many of the smartest analysts I know consistently lose money? What if the secret to winning isn't found in the charts at all, but somewhere much deeper, somewhere inside you? This question haunted me for years. I was that trader, the one who believed that with just one more book, one more seminar, or one more complex strategy, I would finally crack the code. My screens were a chaotic mess of lines, oscillators, and indicators, each one promising to reveal the market's next move. I was a technician, a chartist, a student of the market's language. I lived and breathed analysis, convinced that the more I knew, the more I would win. But the reality was a brutal cycle of small wins wiped out by devastating losses. Each loss sent me back to the drawing board, not to question my psychology, but to find a flaw in my analysis. I'd tweak my indicators, adjust my parameters, and dive back in, only to repeat the same painful pattern. I was running on a hamster wheel, burning out from the sheer mental exhaustion of trying to outsmart an entity that felt, at times, intentionally malicious. The breaking point came after a particularly devastating week. I had done everything right. My analysis was flawless. The setup was textbook, and I was sure this was the trade that would not only recover my recent losses, but also validate my entire approach. But the market, as it so often does, had other plans. It moved against me with a ferocity that felt personal. I held on, frozen by a toxic mix of hope and fear, watching my stop-loss get hit and my account balance plummet. That night, I didn't just feel defeated, I felt hollowed out. I realized that my obsession with analysis was a shield, a way to avoid confronting the real problem, my own emotions. Greed made me jump into trades too early. Fear made me exit winning positions prematurely. My ego made me hold onto losers, refusing to accept I was wrong. The charts weren't my enemy, my own mind was. So I did something that felt like blasphemy at the time. I turned off the screens. I stepped away from the indicators, the news feeds, and the endless noise. I needed to trade my inner world before I could even think about trading the outer one. My journey turned inward. I started practicing mindfulness, not to become a better trader, but simply to find a moment of peace in the chaos of my own head. I began to observe my thoughts and emotions without judgment, watching them rise and fall like the very market waves that had tormented me. I learned to sit in stillness, to breathe through the anxiety, and to find a sense of calm that wasn't dependent on my P&L. It was in this period of quiet reflection that the most profound truth about trading revealed itself to me. Real mastery in the market has almost nothing to do with predicting its next move. It is entirely about managing your own reactions to its moves. It's about cultivating unshakable patience when the market offers nothing ironclad discipline to follow your plan when your heart is pounding, and the emotional stability to remain unfazed whether you just had a huge win or a crushing loss. The market is an endless ocean of chaos. You cannot control the waves, but you can learn to surf. The gap between the trader who quits after 6 months and the one who thrives for decades is unfilled with more complex strategies. It's filled with one simple, yet incredibly difficult skill: self-control. From this realization, I forged a new set of rules for myself, not trading rules, but survival rules. These weren't about indicators or patterns, They were about protecting my mind, my capital, and my longevity in the game. The first rule is perhaps the most difficult, for any ambitious trader to accept. Stay still when there is no clear opportunity. The market doesn't owe you a setup every day. Most of the time, the highest probability action is no action at all. K. The urge to trade out of boredom. To feel busy or to chase a small move is a siren's call that leads straight to the rocks. Professional traders are masters of patience. K. They can sit on their hands for days, even weeks, waiting for the one perfect pitch. K. Amateurs, on the other hand, swing at everything. They bleed their accounts dry through 1,000 paper cuts, trading just for the sake of trading. Learning to do nothing is the most profitable action you can take. The second rule is to trade your plan, not your feelings. Before you ever click the buy or sell button, your work should already be done. You must know your exact entry point, your profit target, and, most importantly, your non-negotiable stop loss. Once that trade is live, your job as a discretionary thinker is over. You are no longer an analyst. You are an operator, a machine executing a predetermined plan. The moment the trade is active, your emotions will scream at you. Greed will tell you to move your profit target further up. Fear will whisper that you should snatch a tiny profit before it reverses. Your ego will beg you to move your stop loss just a little bit further down, convinced the market is about to turn in your favor. You must treat these voices as nothing more than noise. Your original, unemotional plan is your only guide. Once you set your entry and stop loss, you do not touch them, period. This discipline is the firewall that protects you from yourself. The third and final rule is to know your limits. Trading is a marathon, not a sprint. Your goal is not to have the biggest winning day. It's to stay in the game long enough to let your edge play out. This means you must never, ever chase your losses. A losing trade is a sunk cost, a business expense. Trying to win it back immediately is called revenge trading, and it's the fastest way to blow up your account. It's a purely emotional act driven by a bruised ego. You take on bigger size, accept lower quality setups, and throw your rules out the window, all in a desperate attempt to erase the red from your screen. But the market doesn't care about your feelings. The best traders I know aren't necessarily the ones who win the most trades. They are the ones who lose the smallest. They have an intimate understanding of risk and an unwavering respect for its power. They know when to walk away, to close the laptop, and to live to fight another day. Longevity is the ultimate victory. I once had the privilege of spending time with a wealthy, semi-retired trader who lives a quiet, unassuming life in Bali. Away from the noise of Wall Street, he trades for a few hours each morning, then spends the rest of his day surfing and enjoying his family. I asked him what the secret to his decades-long success was. I expected a complex answer about algorithmic models or macroeconomic analysis. Instead, he smiled and said something I'll never forget. "I don't trade to win. I trade to stay awake." He explained that for him, the goal wasn't the money. The money was simply a byproduct of achieving a certain state of mind. He traded to be fully present, fully aware, and fully in control of his own internal state. When your mind is calm, clear, and focused, he said, the right trading decisions happen naturally. The money just follows. That conversation fundamentally shifted my perspective on what it means to be a successful trader. True financial freedom isn't about hitting that one legendary trade that makes you rich overnight. It isn't found in a bigger account balance or a more luxurious lifestyle. True freedom is a state of being. It's the ability to watch the market whipsaw violently, to see your position go deep into the red, and to feel absolutely nothing but calm acceptance. It's the power to follow your plan, take the loss, close your laptop, and walk away without a shred of panic, anger, or regret. When you reach that point, when the market no longer has any emotional power over you, that is when you have truly won. The external game of profits and losses becomes secondary to the internal game of self-mastery. So, I invite you to shift your focus. Stop trying to find the Holy Grail in some new indicator or complex strategy. The Holy Grail is, and always has been, within you. It's in your patience, your discipline, and your emotional resilience. Don't just learn how to read the candlesticks on the chart. Your ultimate goal is to become the candlestick, solid, centered, and unshakable in the face of chaos. Be the calm wick in the storm of market volatility, burning brightly but never consumed by the fire. When you can achieve that, you're no longer just trading the market. You've mastered yourself. And that is the only victory that truly matters.